Okay, so this is going to be a quick video for a member of the James 16 thread. Uh, he wants a little more clarification as to where we enter our trades, where we exit our trades, how we manage our trades, and when do we take a setup and when do we pass it. Mike has obviously done a great job in compiling those videos at the guest section, but this member here needs more clarification, so I thought I'd try to be of some assistance. So basically there are three things that we need to look out for when we go on the look for James 16 setups. The first of them is obviously shape of the bar. It has to have a very nice look to it. The second is location, where the trigger bar is placed at, that is location. The third department is of space. We don't want to be trading into a lot of bar highs, a lot of bar lows, and into a lot of consolidation. By consolidation we mean sideways action like this. You know, these boxes of consolidation, you don't want to be trading into these. Right, that's it. Now what I want you to do is look at this bar here. This is a bearish outside bar that's got a pin bar look to it, and a very authoritative close. Aside from that, notice that we have about 4 or 5 bars that are stuck within the range of this bearish outside bar. By range we mean the distance between the low of the bearish outside bar and the high of the bearish outside bar. We have 1, 2, 3, 4, and almost this bar as well. So 4 to 5 bars, they get tucked up, they get stuck within the range of this bearish outside bar. And when we get a setup like this, you know, it's all that great. This is a great bar in terms of shape. So it receives a check in the shape department. The next department that we need to look at is the location. By location we mean the area that this pin bar or the bearish outside bar occurs at. It's at a swing high. You would have read through the thread that such bars are best taken at swing highs and swing lows, because you have, basically you always have that space available for the trade to run into. Now this is a swing low of the uptrend, and this is a swing high of the uptrend. We get a bearish outside bar at the swing high. So it's all that much high probability because it's occurring at a swing high as well. So this is the first thing that interests me on the setup here. I would also just zoom out a bit to look at the overall picture, and I see this long-term downtrend. I would throw in my Fibonacci here to see that the bearish outside bar, which is this bar here, also lines up with the 61.8 Fib retracement. I'll also see if I can find a big round number. Okay, so we have the 8500 region here as well. The 8500 region, if you scroll back, you'll clearly see that price is held here as support earlier. It is held here as resistance as well. So this is a responsive level, and the fact that it is lining up with the 61.8 to give off the bearish outside bar, it's something that should enable you to check the location mark as well, because we have a confluence here. This is confluence at the James 16 thread and the James 16 group. By confluence we basically mean that we have more than one tools that we use as support and resistance indicators line up to give off a price action bar, so it has a greater chance of working out. The third thing that we will look for is space. By space I mean this. This distance to the first trouble area, which is these bar highs here. I need to look out for that. If these bar highs were, say, somewhere over here, the third department would receive a cross from me, because then you're trading into a first trouble area which is very near your entry point, and then price has a chance of bouncing off this first trouble area. So you need to watch out for these areas. In this case we have about a good 15 to 20 pips to the first trouble area, which is ample time for you to move your stop to break even or manage your trade well. Coming to entry points are typically 5 to 10 pips depending on the time frame, 5 to 10 pips below or above the price action bar. In this case, it's a bearish outside bar, so I'm gonna place a sell stop order 5 to 6 pips below the low. So it would be somewhere over here. And again, like I said, the first trouble area is down here, which should give you enough time to at least move your stop to break even or take partial profit or full profit, or however you want to manage this trade. Your initial stop will go a few pips, again 5 or 6 pips above the high of this bearish outside bar, which is how conventionally we trade the James 16 setups. So this is really it. You take your entry here, and when price hits this first trouble area, which it is highly likely to do, you can either take full profit here, you can take maybe half profit here. By half profit I mean if you were short by 2 lots on this bearish outside bar, you would take 1 lot off at this level and leave the other at break even, or maybe at this initial stop here. However you want to manage this trade, it's really up to you. That's really it. If you really just look at it, price broke through this first trouble area, it pulled back to it and found resistance, although we have price making its way quite a bit above the first trouble area. And if you had moved your stop to break even without taking any profit here, you would probably have been stopped out for break even here, which is again fine, because individual setups really don't matter. What matters is your long-term progress with a trade management strategy. So that's what you need to look out for. This is really it. Very, very simple stuff. It doesn't get any more complicated than that. We just look for 3 things. You need to look for a very good bar. It has to be long, big bar, authoritative, close. In case of a bearish outside bar and a bullish outside bar, you want, preferably you want bars that get engulfed within the range of that trigger bar and stuff. For location, you need to make sure that there's confluence there, and you also need to look out for spatial concerns. You don't want to be trading into a lot of traffic, into a lot of bar highs, bar lows, etc.